Very interesting. All right, overseas, Japan slips into recession, and J.P. Morgan says dump the U.S. and buy Europe. A good idea right now or not as we head into the holiday season? Darren Richards joins us. He is Chief Investment Officer of AKT Wealth Advisors. And Paul Dietrich is here on Post 9 with me. He is the CEO and CIO of Fairfax Global Markets. Good to see you both. Paul, I'm going to start with you. You know, it's been a rough year for a lot of your peers. You have managed to outperform most of your peers, but you're also a value investor. And given what we see in this market, do you still find value, or is it getting tougher?
It's getting much tougher to find it in this particular market. I'm barely getting enough for a diversified portfolio, but they're still there. And it's interesting because what we saw with Whale Rock and Par, they have many of the holdings that I have. They're value investors too. And it seems to me that it's the value investors are the ones who were outperforming last year. They're outperforming the benchmarks and the S&P this year. And I think that value investors buying undervalued stocks, that's the way will continue to overperform.
Darren, I want you to get to comment, if you would, on Japan, because I know you were overweight Asian emerging markets. Do you still hold that position? And did Japan come as a surprise to you, as it did to many people?
Hi, Sue. Yeah, we still hold the emerging markets, but we're actually ex-Japan. It did surprise me that Japan went into recession, but I was pleasantly surprised today when I saw the market basically holding its own, the VIX index barely higher, and Treasury yields actually moved higher. So it indicates that I think the investors are not saying what's happening in Japan is a global issue and it's going to affect Europe and the United States. I think it's more endemic of what's going on in Japan with an aging population, heavy debt levels, and deflation for all these decades. So I'm really pleasantly surprised with the way the market has rebounded so far.
So what would you be putting money into right now, Darren? Let's take a look at that, and then Paul, I'll ask you the same question.
Yeah, last month we actually increased our equity exposure, and we went into large cap stocks and international stocks. So the J.P. Morgan piece that indicated that they were moving U.S. to international, and particularly in Europe, I think makes sense. The timing is a little hard to call. Earlier this year, we went in small cap international stocks because generally the small caps rally first. So we think that Europe's set up for recovery, but we're not quite there yet. So we've kind of been inching back into that market.
Okay. And Paul, you get the final word. Where would you, I know you're saying it's hard to find value, but if you could find some places to put cash to work either here or overseas, where would it be?
I'm looking for value stocks, undervalued stocks that have low PEs, high returns on equity, high free cash flow. And I'm also looking at long-term trends. And I think gasoline prices are going to be lower for a while, and there are a lot of companies like Macy's, Alaska Air, CVR Refining that are value stocks that are going to benefit from lower gas prices. The second, oil prices, and the second area is storage. I'm finding data storage, this is the underlying currency of the tech economy. We're using more and more of it, whether it's at home or in the cloud, everything else. And these stocks, Micron Technologies, Seagate, Western Digital, they're undervalued. They have huge returns on equity, huge free cash flow, this is where we've placed a lot of emphasis.
Yeah. All right, some great ideas, gentlemen. Thank you very much, Paul. Darren, always good to see you. Thanks.
Thanks, you too, Sue.